We want to thank you for taking the time to watch this presentation on the Veterans Aid and Attendance Program. Dan Mccabe with Legacy Asset Preservation has been helping to educate veterans on this important VA benefit for over 9 years. Along with Steve Dabbs, who is a veteran and a VA accredited claims agent accredited by the Department of Veterans Affairs, are providing this video in order to give you a complete overview of the Veterans Aid and Attendance Program. In this presentation, you will learn what are the requirements that must be met in order to qualify for this benefit, how much money you can receive, what you need to do to apply for the benefits, some of the common misinformation that surrounds this important benefit. We also want to address who can help file a claim and what is your first step to file your claim. We want to thank the veterans for their service. We also want to thank the spouses and the surviving spouses of our veterans for helping to keep the home front safe. Jim Nicholson, former Secretary of Veterans Affairs, said that this is the most underutilized benefit that the VA administers. Less than 10% of veterans or spouses who qualify for this benefit have ever applied for it. The qualification requirements are fairly straightforward. First, the benefits are for wartime veterans, spouses, and their surviving spouses. If you are a surviving spouse, you must have been married to the veteran at the time of his or her death. You also cannot have remarried. Doing so will disqualify you for benefits. The veteran must have served at least 1 day during a period of war with a total of 90 days of active duty. It is important to note that you did not have to see battle in order to qualify. You could have been guarding the gold at Fort Knox, working in the Pentagon, or taking pictures of generals at luau's in Hawaii. Periods of war include World War II, the Korean conflict, the Vietnam War, and the Gulf conflict. The veteran must have received an honorable or general discharge. The person applying for benefits must have the need of the assistance of another individual. The reason for assistance does not have to be service-connected. If you are over the age of 65, things like Alzheimer's, dementia, a stroke, or Parkinson's can lead to a situation where you need to have someone assist you with at least one activity of daily living. These include bathing, dressing, toileting, transferring, eating, and walking. Someone who needs help to get out of bed, as well as someone with mental impairment, blindness, or are homebound could qualify. In addition, if you reside in an assisted living community or nursing home, these benefits may be available to help pay for these expenses. Please note, the expense of an independent living community is not an allowed expense. The VA will take into account the total assets that a couple or individual has in order to determine if they qualify for financial assistance. The net total household income, which means income from both husband and wife, must be less than the outgo for care expenses in order to qualify for the full benefit. The actual cost of home health care, assisted living, nursing home, plus Medicare and Medicare supplement premiums are used to derive at the net income figure. As we have already mentioned, a non-licensed family member can be a paid caregiver and used to offset the gross income, allowing the veteran to qualify for the full benefit. Here is an example of someone making $4,000 per month, which includes Social Security, pension, and interest income from a bank CD or other investments. At the same time, they are paying an assisted living community $3,800 per month. They also pay Part B premium and Medicare supplement premiums for a total of $400. So their outgo for allowable expenses is $4,200. This is a $200 negative, which allows them to be approved for the full monthly benefit. For a married couple, this is over $2,000 per month, giving them an additional $1,800 per month to use for other expenses. Now, some of you may have already spoke with someone from the VA about this benefit and were told that you'd make too much money or that your assets are too high to qualify. This is because they simply ask you how much your monthly income is and did not calculate your net income after deducting your medical expenses. This is where we can help by adjusting both your non-fixed income as well as properly positioning your assets without the loss of the control of your assets, so that when you apply for benefits, your application will be approved. Without this planning, your application will be denied. How much can you receive? Currently, a married veteran can receive up to $2,085 per month. A single veteran, $1,758 per month. And for a surviving spouse, $1,130 per month. There is also a benefit for a living spouse of a veteran that needs care, which is up to $1,380 per month. This money is tax-free and does not affect your Social Security, benefits, or taxes. Now, what does this mean in real money? You would have to have $652,858 in an account earning 5% before taxes, which would generate $33,150 per year. In turn, would leave you with an after-tax amount of $25,020 or $2,085 per month. Do you have $652,858 earning 5% currently? As you can see, this is a big benefit. Here are a few of the myths that surround the aid and attendance benefit. Myth number 1, anyone can help a veteran file a claim. What the law actually says is anyone can help one applicant one time. Therefore, in order to legally help a veteran, the law is clear and it states that no individual may act as an agent or attorney in the preparation, presentation, or prosecution of any claim under laws administered by the Secretary, unless such individual has been recognized for such purpose by the Secretary. Those recognized by the VA include veteran service officers, accredited attorneys, and accredited claims agent. As I've already mentioned, Steve Dabbs is a VA accredited claims agent accredited by the Department of Veterans Affairs. Both Steve and Dan have helped hundreds of veterans apply and be approved for this benefit. Please note that the law does allow a non-accredited individual to educate veterans on VA benefits. As mentioned, Dan Mccabe has been educating veterans for over 9 years on this important benefit. Myth number 2, there is not a look-back penalty on transfer of assets. This is only partially true. The VA considers the date of death of the veteran as the date of the claim for the surviving spouse. So if you are a surviving spouse and have excess assets according to the VA, then you may have to wait a full year from your veteran spouse's date of death to apply for the benefits. This is why it's important to work with someone that understands these rules and can help you properly position your assets before the death of your spouse. With that said, it is true that currently, if your assets are excessive according to the VA standards, which would prevent you from qualifying for the aid and attendance program, at this time you can reposition your assets without giving up the control of your assets, and then apply for benefits, and the transfer will not cause you to be denied. Please keep in mind that the pivotal word is currently. Congress has entertained changing this part of the law to include a look-back penalty like Medicaid, which currently has a 5-year look-back for transfer of assets. If passed, new planning strategies will be required. Because of this, we recommend that you meet with Dan Mccabe and discuss pre-planning so that in the event that the law does change, you will not be affected by these changes in the law. Myth number 3. A single veteran can have $50,000 and a married couple can have $80,000 in net worth. This is simply not true. Let's first look at the law. Title 38, which governs all VA benefits, states the Secretary shall deny or discontinue the payments of pension if it is reasonable that the sum part of the corpus of such estate be consumed for the veteran's maintenance. And then, under the Code of Federal Regulations, which defines the law, simply says, in determining net worth, consideration will be given to the amount of the claimant's income together with the following: property that can be readily converted into cash with no substantial sacrifice, and their life expectancy. Now, in the VA manual, it clearly directs that if a veteran or surviving spouse has assets in excess of $80,000, a formal net worth administrative decision must be completed, which means it needs to go to the manager. The following is right out of the manual that the VA uses to review a claim. It states the claimant has an estate of at least $80,000 and it has been determined that net worth is not a bar to entitlement. And it also goes on to say that consider a claimant's net worth even though it might be below $80,000. This is somewhat of a subjective process. Again, another example of why it is important to work with someone that understands this process and can help determine, based on your cost of care, age, and current health, how much money you should have in your name at the time of your application. This is why, if you work with somebody that doesn't understand this, your claim could be denied. Myth number 4. If the veteran or surviving spouse is driving, they cannot qualify for pension benefits. Again, this is simply not true. Nowhere in the law, Title 38, in the regulations, or in the manual does it state that you cannot be driving a car. It's not even on the application, are you driving? This is a common myth that is circulated about this benefit, and again, it's just not true. Myth number 5. The home of a veteran is an exempt asset. The Code of Federal Regulations defines a home as a place of residence. This presents a problem. When you move from your home to an assisted living community or nursing home, your home is no longer considered the place of residence and is no longer exempt. At this point, the home becomes an asset that can cause you to be disqualified for benefits. Plus, if you have filed a claim and are approved for benefits, then sell your home, the proceeds could cause you to have your benefits terminated. Worse yet, if you did not live in your home at the time you filed your claim and did not disclose the home ownership on your claim form, the VA could request your money back for all benefits that have been paid to you. This is why it's important to plan ahead. Dan Mccabe can help you decide the best way to title a home before you apply for benefits. Another myth is life insurance cash value is exempt. Again, this is simply not true and is considered an accountable asset and must be disclosed to the VA at time of claim. These are just a few of the myths that surround this important benefit. Now keep in mind, claims can take several months to qualify, even if the claim is completed properly. Done improperly, your claim can be delayed up to a year or longer and even denied. This is why it's important to work with somebody like Dan Mccabe who understands the qualification requirements for this program and has a proven approval track record. There are both non-accredited and accredited individuals that not only have never filed a claim, but do not have any idea how to get a claim approved. Beware of these individuals because they often do more harm than good. Dan Mccabe has helped hundreds of veterans qualify for this benefit and is personally responsible for hundreds of thousands of dollars in benefits being paid. Please keep in mind, each case is different and must be evaluated on its own merits. Dan Mccabe can quickly assess your case to determine if you qualify. We believe that all servicemen and women who served our country during a period of war, as well as their spouses, have earned this benefit because of their sacrifice. Let us help you determine if you can qualify for this benefit today. Thank you for taking the time to review this presentation. Call Dan Mccabe for more information.